All right, welcome back to the channel. I know people all want to jump right into this topic, think that trading can be harder than it really is. It's all on what you put into it. It really is. I mean, it's how much work you put into it will determine what you're going to get out of it. Just like anything in life, if you practice it enough, the success, you'll reap the rewards at the end. So you just have to stay the course and know what you're doing correctly. Trading, it's just like anything else in life. We have to train ourselves how to end up doing or performing a certain job. Many of us go to school, graduate from high school, go to college, things of that nature, and to land a job in some field or profession that we've studied. It's the same thing here. We study the markets on a daily basis. I mean, you can educate yourself and learn how to trade on your very own. It may be the harder way about going to do it. I know some people like to find someone that may be a mentor to them, someone that they know really knows how to trade, and follow that route. Now, I'm not a mentor, I'm not an educator, I'm not an instructor. I'm just here to share with you the way that I trade and how I see the markets on a daily basis. So today I want to let you know that trading is not as hard as you think it is, especially when it comes to futures. I love the future markets. I know there's a lot going on in the world of when it surrounds other markets, say for instance like the Forex. And I'm not an option trader. It's just too many details and too many things I got to keep my eyes on. So I like to get in, look for setups according to what the structure of the market is showing me, how it's laid out, and I'm following price action back at to key zones. I trade supply and demand. If you're a first time viewer, that is the cornerstone to how I trade. I love trading supply and demand. 98% or more of how I trade on a daily is surrounding a zone, whether it's aggressive buying or areas of selling. Now we have to, of course, pay attention to what's unfolding and taking place, because we know that the market can shift and the tide can turn at any given moment. So today I want to show you just a beautiful trade setup that I took. And I posted this trade over on the Discord a short bit ago. So if you're not a Discord member and you want to join, it's free. Just find the link down in the description portion of the video down below and come over and join us. I post my trades, try to on a daily basis, post some entries. I don't do trade alerts because, that's just not my forte. And I don't want people to really say for instance, follow my quote unquote trades exactly, just be wanting and waiting for my trades for me to post something about an alert or a trade, because I know how the things can go. If it doesn't work out and that you don't get out the trade quick enough like I may do, then it comes back against you and bites you in the butt. Then you'll be wanting to point the fingers at someone. That's just how this business is. It just not this business, is everything else. That's how people are in general. I hate to state that, but there are a lot of people out there who are like that. They just want quick success and overnight success, and that's not the way. That's not the right way of going about it. You have to be able to read these charts and trade on your own. My setups may not be the same setups that you're looking for. I mean, we may not see eye to eye. You may catch things that I don't catch, and I may catch things that you don't catch. It's trading is an interpretation or perspective of how you look at the markets and perceive it in a sense. I like to follow the structure, so we're going to go over that right now. If we take a close look at what took place, over the last two trading sessions. I know the market sold off here. We got a break of structure below. Then it starts ramping back up to the upside, and it takes out an area of structure right here and starts to move higher here, pulls back, or breaks a bit of structure back down to the downside before pushing higher. Correct? So we break this high here. All right, that's a major swing area or major high where the market rebroke structure back to the upside, and it started breaking more structure as it's pushing higher. So structure breaks are just when the market is making higher highs and higher lows, but you have to be mindful, because the market can make a high, for example, and then it could shift back lower, which I'm going to show you, and break structure back to the downside. So let's take for example right here. The market pushed up, it pulled back, it broke higher, right? Okay, it made a high here. I'm gonna blow this up so you can see it. This is on my 60 range higher time frame chart or higher base chart. It pushed lower right here, so it broke this swing right here, okay? And then it broke structure to the upside. Okay, it broke through this area, broke this high right here at 926. Then what does it do? It turns back around. We make a low, okay, breaking through this area of structure where this low is at right here at 17,881. I like to do these kind of market analysis, kind of quick talks, so people can understand my mind thought or my thought process And this is a freebie. A lot of times I post these type trades breakdowns over on the private community for those that are elite members. And if you're interested in becoming an elite member, there's a link right down in the description where I told you to look for the Discord. Right below that, you'll see a link that says become a member. If you choose to become an elite member, you get the trade breakdowns to where I go into detail about trade setups, okay? I mean, I give you my full rundown of what I was thinking prior to the trade, basically market analysis, working you up to the trade, talking about where to put stops and things of that nature and why I took the trade and what my target profit is prior to, just things of that nature, so you can get an understanding of my thought process of why I took that trade. Okay, so if you're interested, it's $6.99 a month. Okay, only $6.99. Find the link down in the description portion of the video, or you can click on join. But make sure you choose the elite channel supporter or elite channel member tier. It's the second one. All right, so moving on. So what happens here is that we had a break of structure below 882. So this morning when that happened, before the market opened up, we had this high. We broke structure here. So it may have seemed like we're pushing higher, correct? But then the market turns back around and we start taking out some internal area of structure right here to the downside within this swing. And then we broke structure, okay? We broke structure shortly before the market opened up. We came down, okay? Broke structure, pull back, broke structure lower, taking out below here at 876, and we kept moving. So then my mindset is going to be bearish, okay? I'm going to be looking for opportunities to go short, all right? So the market pushes lower. All right, we have a bit of area of support here, pulls back. There is a supply zone resting right here. There's aggressive selling. So maybe you caught that going short and you took the ride back on down shortly after the market opening up, and then you you aim for an area of an imbalance, or at least back down to this area of demand. Now this is an area of demand, and you have to be mindful what took place here, because there was aggressive buying to the upside, but you also got to be mindful that the market was pushing lower here, breaking structure. So if we're breaking structure to the downside, we tap into a key area of demand. That's not to say you can't reject this area, but be mindful because the sentiment of the market is bearish. So we should be looking for shorts. So that's exactly what happened here. Sorry about that. I tapped my mic. It pushed down, tapped the zone, it pulled back. So maybe you got into the trade. You took a quick scalp back to the upside, but be careful because it's an area of resistance right here where the market could reject it, and it did that exactly. So it pushed up to this area, and then it pushed lower, all right, and it kept running lower, pushing lower, and it came on down, and it tapped into this area right here. Now, this was another area of aggressive buying to the upside, so there was this was a prior area of demand. But it is tested. So for me, it's not a high probability zone. It's low probability because there's no gap back at the zone. And every bit of any area of imbalance was filled when the market got back to the zone here. But it did reject it, okay? Even though this was a tested demand zone, it's still rejected at this area here. But the thing to be mindful too is it may not have been just the fact is that it rejected this zone, but there was also confluence that there was the round number of 17,800. Round numbers, half numbers, 40, 70 levels. Those are pivots in which the market could reject. It bounced off that area there, okay? And then it pulled back to the upside. Now I'm getting ready to get into a trade setup that I took, the last one that I posted over in the Discord, and it was a beautiful trade. I think, where I went short for like 11 or 12 points. You can catch trades like this on a daily basis if you simply are able to follow the structure of the market. Is what I'm getting at. So pay close attention if the market shifts and starts to take out and break structures back to the downside. Know which direction to trade according to structure of the market, and pay close attention to price action when you get down to your lower time frame chart, because I'm gonna give you a rundown of the strategy. That's what I'm working up to talk to you about. So the market rejected down here at 800. It pulls back. It breaks this area here. So, all right, it breaks this high right here at 831.5. So, okay, it may look like possibly we could be doing what? Maybe shifting to the upside. But honestly, be careful because the market still has not shown its full hand that it really wants to continue pushing higher. Okay, all right. So what we want to see the market do is break. Have a structural shift to the upside where it's breaking structure to the upside at least. Like it pushed up high here, took out this high here, made a high, pull back. Now, if we break structure to the upside, yeah, then it could look like, we could be on the upward movement to the upside, and we can look for pullbacks to areas of demand to go long, okay? But when the market pushed up here, what do you have here? This is aggressive selling, okay? The market has already shown its hand to where it's breaking structure continuously to the downside, all right? Bounced off 800, pulls back to this area of supply here. Now, is it a high probability or low probability zone here? This is going to be a low probability zone for me again because there was no gap back. When it got back to the zone was already tested. When it broke lower here with this red candle, broke below this this last bullish up candle, this red candle broke below it but to the downside. The next candle pulled back and it tapped right into the wick or the bottom end of that bullish candle there. So it closed the gap right there, back to the upside at the zone, okay? All right, so just picture this being the zone. I'm going to show you right here, okay? And it fills back in when it comes back right here, okay? So, but is there still opportunity to where the market can reject? Yeah, even though it's low probability, that does not mean the market will not reject that area. So we can at least be mindful. Now, I love trade setups where there is a gap at the zone because then it goes from, it makes the setup high priority or high, puts me on high alert, and it makes a high probability area to take interest in. Now, I'm not taking the trade off of my higher base chart, my 60 range chart. This is where I move down and scale down to a lower time frame chart. So let me show you. We're going to go down to the 12 range. All right, so on the 12 range chart, this is that area right here, 862, 863, that same zone that I just showed you over on the higher time frame right here. Okay, pulls back, taps into that area of supply. Now, what I want to see is I want to see the market doing what? Breaking structure to the downside. All right, for me to be interested in taking a supply setup on the lower time frame, we already have the setup on with an area of supply on the higher base chart or higher time frame chart. Now we're looking for the setup to unfold on the lower time frame. So the market's running to the upside here. Okay, that's the retracement back to that zone that I showed you on the higher base chart. And then it does what? It breaks lower, okay, pulls back and breaks structure. Okay, now when it pulls back here, I'm looking for an area of supply on the lower time frame to mark a zone. This area right here. Now, is it untested? No, it is not untested. It is actually tested, but it's still a area in which we can look for rejection to take place at if the market gets back to the zone. It's only untested because this, let me see here. No, it's actually, I'm sorry, it is actually untested. I'm sorry. Now, if I said tested, I meant untested. Yes, this is an untested zone. So on the 12 range chart, this is a high probability supply zone. Okay, so I mark the higher time frame supply. I come over, I look to see if the market's breaking lower. Okay, pushing lower on a lower time frame and then breaking structure. So I got to break a structure here. It pulls back to this area here, and because we are bearish on the higher time frame and I have a supply zone marked up on my lower time frame, if I get rejection back at this area of supply on my lower time frame, then I'm going to take the short and aim for lower areas. Where? Well, take a look here. When the market was retracing back up, okay, to this area here, look, there is, let's see, the imbalance that was from here to this candle here, right here, that was filled. So the market's going to test lower areas. Where is it possibly going to trade it? Want to test that? Down here around possibly 840. 826, and possibly even lower to fill in this area of imbalance down here at 812. Now I got out at, I think, at like 840, actually right here, it shows you 841 3/4. Okay, so around 840 area. All right. So, and I could have held it for lower. I was just scalping real quick to get in and get out of a trade. Just want to show you. But if you follow price action back to the zone and look to see, were there any areas in which the market rejected the zone on the lower time frame because it already tapped into the higher time frame supply area? See what happened with price action. Is there any imbalances? If there are imbalances that are filled and you get the rejection on the lower time frame, that means the market's going to want to push lower. Okay, mark that. Okay, all right. That's a tip for you. That's some key means of advice for you. Okay, so if I go back and I'm looking at the higher time frame, was there any imbalance resting right here? The market filled the imbalance. So if I get the rejection on the lower time frame, I know that the market more likely is going to push lower and want to come to some area of either maybe an area of support or fill in an area of imbalance. Okay, so I get into the trade on the pullback here. Once it taps into that lower time frame, supply zone, I'm going to do what? I'm going to look for the break and close of the candle at the rejection, which is See that last bullish candle to the upside? When we get this bearish candle that breaks below it, I'm going to go short. I was a little late on the trade. I should have got in here at 55 and picked myself up probably additional 3 points of profit there to the downside. So this was your entry point right here at 855.5 to go short, aiming for lower areas back down on the higher time frame or higher base chart, back to an area of imbalance or possibly back even lower, depending on what price action looked like as it was retracing back to the zone. Okay, keep that in mind. We have to follow and keep price action on mind with the movement as the market is moving back to the zone. Okay, and it's as simple as that. If you do that, follow structure and following price action just as well, when the market gets back to a zone, you're going to have to see, once the market rejects, do you have a key area in which you can take the trade back down to. The same thing if it was tapping into demand, all right, and we pull back to a key area of demand on a higher base chart, I have to look above to see if, once the market creates a demand zone on my lower time frame, if I'm able, same setup, just reverse, if I'm able to take it back, going back to the upside to give me some profit. So I just want to give you, let you know about that trade that I took and talk about it a little bit more in detail. So that you understand. But just follow structure. Structure is everything, because it's going to let you know which direction you need to be trading. And then you're just paying attention to price action as it's getting back to a zone. And then moving down to a lower time frame chart, marking your zone once you get structure breaks. In this example here, back into the downside. Then it pulls back. If you get a nice area of supply, then you got two means of confluence there for confirmation. You got a higher time frame supply zone, lower time frame supply zone, rejection on the lower time frame, take your trade going short, because the higher time frame is showing you that it wants to continue pushing lower, right? And if you look here to see what it did, when it rejected this area, what did it do? It came all the way back down here to test this low. All right, it didn't break through it. Why didn't it break through it? I'm not saying it won't break through it, because it possibly could now, but it came down here and bounced off of here because there's an area of imbalance resting right here. So when it got back down here, it bounced, pushed back up, and it may push lower, or we may now get a structure break to the upside and break above 864. It's as simple as that. You have to be able to use these two things and read the overall flow and the movement of the market. Okay, I'm talking about ebbs and flows of the market. But that's all I wanted to share with you today. If you're not a current subscriber, I would highly recommend you to sub into the channel. I drop videos like this just about every single day because they're valuable. The content here is very valuable, and I believe that it helps people out. And if it's helped you today, open your eyes up a little bit more, even if it just slightly did, okay? And you're starting to see, oh, okay, I understand the market structure a little bit better now. Please drop a like on the video. That little thumbs up button, please drop a like on it. If you're not a current subscriber, please take the time to go ahead and click on the sub button, and make sure you click on the bell that says all, so that all your post notifications are turned on and you never miss one of the uploads here on the channel. But again, please drop a like on the video if you found value in the content. If you're interested in joining the Discord, find the link down below. If you're interested in becoming an elite member, basically what you're doing is supporting my efforts as a content creator here on the YouTube platform. And in return, you get those perks and rewards such as my trade breakdown. So I appreciate everyone tuning in on a daily. I'll see everyone in the next video. Take care.